All right, folks, the market continues its effort at trying to find its footing, but an early rally effort really fizzled pretty quickly in a fog of uncertainty that includes growing worries about the election outcome. And speaking of politics, how important is it for another round of stimulus? I say without it, this rally could get slammed, and it's beginning to happen. Even as big names like Apple and Microsoft drip, folks, some of these other momentum names like cloud names are acting great. We'll dive underneath the numbers here for you. Meanwhile, Amazon, in fact, got an upgrade this morning, a new share price target, 3,800 from RBC. Tesla, they've got a new target of 515 from 480 at Piper Sandler. But you might be thinking about buying these value stocks, right? You keep hearing about it. The problem is, though, what is a value stock? Because not everything that's underperforming is on sale. And I know the old sweater analogy, right, is really popular. But just because a sweater that you were spying at $100 is now on sale for $40 doesn't mean it's a value. I mean, that sweater might have a stain that can't be removed. So there's a lot of questions, and we've got the right guest to ask. Kingsview Wealth Management CIO, Fox Business contributor Scott Martin, 1847 Financials, Grant Branch, and Wealth Enhancement Group Senior VP Nicole Webb. So here are the questions for you. Just to start off, first of all, should investors be looking to get back in momentum stocks before they pick up steam? Let me start with you on this, Nicole, because early in the session, they were acting pretty good. And of course, we know that these are momentum stocks. Once the train leaves the station, it moves pretty quickly.
Yeah, I think the first thing that we have to address always, go deep inside yourself and check in. Are you becoming a bandwagon investor, or are you really following the discipline of momentum investing? We have to remember, when it comes to the discipline of momentum, when a trend gets too strong, you start to pare back. That doesn't mean you buy the stained sweater with the liquidity you create, but you do go look for the dislocations available in the market and where you're about to see momentum begin to pick up.
All right, I feel like the old Kung Fu show. I'm not sure if I grabbed the pebble from your hand on that one, but I'm going to go to Greg because he can help me focus on this a little bit more. Listen, I hear what she's saying, honestly, but Greg, the bottom line is going back to these same names has paid off huge for investors, so you can understand why people would want to do it over and over again.
Yeah, I do understand that, and in the midst of this volatility, until we have the certainty of an election outcome, that might not be a bad idea. Some of these names are poised for much stronger growth in the fourth quarter. They're still well positioned. They're poised for a strong 2021. I'd look specifically, if you're focusing on momentum, on stocks that are suited to outperform again in 2021. There's some that have experienced structural change, like the e-retailers. They were growing at 18% with 1% annual growth in December. That's now jumped to 30% penetration from 18%. And so that's a structural tailwind that you can bank on. Those earnings will continue to grow and power through in the next few quarters.
Scott, you're one of my favorite traders. Are you looking at momentum right now? Some of these big names that have pulled back, and Apple, for instance, and some people may say Apple's actually breaking down, but of course the old axiom is buy low, sell high.
Yeah, what's funny is, Charles, a lot of those names you mentioned, whether it's Apple, Microsoft's another one, we've had our eye on PayPal too, man, are coming down to moving averages, which are pretty interesting, or support levels for the last couple months that are going to be really kind of indicative of where these stocks go from here. We own all these names, so we're not looking to add to them just yet, but I will tell you, to stay with the stained sweater analogy here, you got to buy stuff that looks ugly and looks stained right now, I think, in this market, because that rotation is going on, and I'm not afraid to say it because we have been buying it. It's stuff like financials. It's like JP Morgan and Citigroup. In fact, with the controversy going on with the new CEO there, great opportunity to get in there. And also, as you know, Charles, travel and leisure and hospitality, as well as restaurants. So we've talked about Darden restaurants. We talked about Bloomin' in the last couple months, which have been absolutely great. And also Expedia and LUV, Southwest Airlines. Companies that looked like they were completely stained, completely going to be left on the rack at the store, and all of a sudden people are buying them because they have been so trashed, they have been so discounted, and that's where you're going to see returns going forward.
Right. So, Nicole, I mean, every stock that's down, though, right, for a while it was like if you weren't one of these half a dozen, tech names, maybe a few of these cloud names, you were considered, quote unquote, a value name. I don't know that we really want to, because that's a pretty wide swath of names. Are there some names out there or some sectors out there that have been overlooked that you think are really good now entry points?
Yeah, absolutely. I think there's a story to be told there about the global restocking that's still happening. Think about the things that you couldn't get on the shelf for months on end. Products that have a shelf life of 2+ years, the staples that you put in your war room, that was sold out around the world. So there's a lot of restocking that needs to happen. In addition to it, when we start to talk about value, I do think with as much guidance as we're getting around low interest rates, going back to what we saw about 10 years ago, we are going to see people start to buy dividend-paying stocks, willing to buy at various price points to create that type of both constraint around liquidity, create the dividend income stream, but then also start to take a hold around just how do they create kind of bumpers on their bowling alley when they're willing to take on more equity premium risk in these momentum stocks, knowing that it goes up, it goes down, but I need a safe place to take money from when I need it, if I need it, but yet I still want to remain invested when rates are as low as they are.
I want to talk about the impact of the consumer on the economy and the markets. We just got consumer sentiment numbers out, Greg, that came in better than expected. We hadn't seen that in a long time. In fact, of all of these economic data points, almost all of them look like a V. Consumer sentiment looks like an L. How critical is it that we get the consumer, and really, you talked about the consumer earlier, that the consumer really holds up their end of the bargain, and what role does fiscal stimulus play in that happening?
Yeah, you hit the nail on the head, Charles. In order for the consumer to hold up their end of the bargain, our government kind of needs to hold up its end of the bargain. And so, at the lower socioeconomic ends, we need the stimulus. We need there to be job growth. We need there to be things that continue a spike in confidence. And so, without the architects, without the government kind of shaping and nurturing that, without job growth kind of nurturing that and persevering that, I think we're in for a rocky road ahead unless we get that stuff.
Yeah, I tend to agree. Scott, where are you on that? Because I know that you've got some defensive areas. I mean, you're in gold. You've done very well there. You also, conversely, are buying value. In a few moments, we're going to hear from President Trump on a vaccine timeline. It's going to impact a lot of the stocks you just named. For the record, I had my subscribers take profits on Southwest Airlines 2 days ago because I'm getting a little bit concerned about certain parts of the reopening trade. So where are we with all of this? Because it's all connected.
Well, yeah, and you're right. I mean, some of those moves that we talked about in Southwest alone, Charles, have been huge. So I don't blame you for taking any profits there. You probably should pare back and then wait for a pullback and maybe get some more. With regards to the consumer, I'm not so sure. I mean, I think the numbers speak for themselves. I mean, the consumer sentiment numbers, yeah, they're from the University of Michigan, and I am an Ohio State Buckeyes fan, but we'll take the data that they give us. The numbers look pretty good. I mean, the future's expectations and the current conditions, Charles, are the highest they've been since the pandemic began in March. So to me, the consumer is starting to feel a little bit more comfortable. They're getting support from the Treasury Department. We're starting to see maybe less furloughing going on. So to me, the consumer names are really where you want to keep an eye on. And don't forget, a lot of the names we've talked about both in the restaurants and travel industry are still way off. I mean, we're talking 20, 25, 30% potentially off their highs from January and February.
Interesting. Yesterday, there was a rumor or story, actually, that Dave & Buster's may go bankrupt. And then this morning, 2 firms upgraded Dave & Buster's. So your point is absolutely right. Wall Street is looking beyond the headline, beyond the scuttlebutt and focusing on the opportunities. I've only got a minute to go. Nicole, quickly, if you can, what's the greatest risk right now for the market? We see it looks really weak right now. It looks vulnerable right now. People are afraid. Is it the TikTok drama? Is it the Washington, D.C. drama? Is it the election? What are you most concerned about?
I would say that the only thing that I am really concerned about right now is that people let their bias about the upcoming election keep them paralyzed from investing. We have got to grow our way out of this on the backside. We pumped an unprecedented amount of stimulus, liquidity. The money needs to be spent here. It needs to be invested here. Growing our way out is the way out on the backside of COVID. And people who aren't paying attention to that, aren't seeing the opportunity in the market, they're going to shoot themselves in the foot. I think they're going to miss out on some opportunity as we continue to grow and excel on the tailwinds of additional stimulus, additional liquidity.
Right. Amen, sister. I couldn't have said it better. I love the way you laid that out for our audience. Nicole, Greg, Scott, thank you all very much. Have a fantastic weekend. Meanwhile, folks, Congress and the White House